Rohr here with an early concise highlight on Friday, September 19th, 2014. And this is going to be particularly concise today because all of the foreign exchange is conforming to the sort of indications which we articulated in Thursday morning's Global View video analysis. So we're going to concentrate on the equities and the fixed income. Moving on to how the influences have affected the markets, we can see that the equities are still friendly off of the continued Fed accommodation. And one of the key things we highlighted in the analysis yesterday was the degree to which the S&P future overran the high of the right shoulder of its head and shoulders top at 1998. That was the equivalent of approximately the 2004 area in the September contract, and with the overrunning of 1998, even though it sagged back below it temporarily on Wednesday, you'll notice how it gapped and left the low right around that level on Thursday. And the burden of proof was on the bears to put it back below that level on a pure technical price action to say, gee, maybe this whole congestion range, maybe this whole pattern has not been as completely negated as we thought, but you had to get some downside momentum going again. And you also needed that to put the hourly MACD, which you know we rely upon when markets get somewhat distended in their trends, you had to put this back below its upper runaway band. The burden of proof was on the bears to put some pressure on this market to prevent it from strengthening further, as we saw even in spite of almost a full session of churn after the early strength, that it reverted to strength late in the day. Not a surprise if it couldn't weaken off. And actually this morning, this market is up 4 at 2008. And so it's already feeding on itself and looking to push up through the best level seen by the September contract prior to expiration, where the bigger resistance this week is not till up in the 2025 area, and next week that weekly oscillator and topping line evolve up to 2027 to 2030. So there's quite a bit of upside left if the bears can't find a way to knock this market back below 1998 sometime soon. That pretty much does it for the short-term view of the S&P 500.